Hi, good morning, everyone. Today is March 22nd. Just want to give a quick recap on previous week and what it looks like this week. Treasury yield surged to the highest level in more than a year as investors position for stronger inflation. Tech stock tumbled through February, and sectors that led through the pandemic outperformed. Tech sell-ups have been followed by deep buying as traders moved their focus from inflation concern and rebounded after Fed's FOMC meeting and yield dipped last Friday. President Biden has signed the stimulus plan and money was distributed. Dow Jones Industrial Average ended a week at 32,627.97, down 0.51%. Nasdaq on Friday ended at 13,215.24, up 0.43%. S&P 500 ended 39.13 versus previous Friday close at 39.43.34. Tesla ended at $654.87, down by 2.26%. GameStop also dropped from 275 to 200.27, which was a dip of 27%, while AMC has valued by 37%, ending at $13.93. At high-tech area, Apple has tumbled 0.86% to 119.99. Facebook, however, has rallied over 8% to $290 from $268.40. Amazon has also dropped it to 3,074.96. On energy sector, Chevron dipped 6.9% to 103.88. XPeng on the electric vehicle sector, however, rallied 14% to $37.48. Oils has also tumbled 6.39% to $61.42 from $65.61. U.S. tech stock futures rise as bond yield cool after Fed comments. Right now, Dow Jones futures is down while Nasdaq is up and S&P 500 is also down a little bit. The first new strategy, Saudi Aramco loses title of world's most profitable company to Apple. They reported earning was really slipped up from previous year, 40% down. Kevin Bruce Invest expected Tesla to soar to 3,000 per share by 2025. I mean, that's just from Kerry Wood, okay? The first new strategy aims to learn from the last recovery run the economy hot, bucking the decade-long precedent that explicitly linked price growth with hiring. Aggressive fiscal stimulus and Fed maintaining easy monetary policy seems to change that. The combination of supercharged economic growth, its value stock and recently unlocked sector became the world market's new winner. The growth giant and treasury debt trade for more than a decade are likely to lose. Growth stock valuation closely tied to interest rate since investors project out the company non-growth expansion and use rate as a discounting tool. I think as the market pricing the yield curve to be 2% or higher, while inflation rate, we realize that policy is not going to be raised till 2023, or at least we project the next quarter with June or July timeline when the market reopen, it's still going to stay the same. So I'm expecting the market will rebound and move up with some new catalysts, hopefully something like yield curve drop back down to 1.5%, or strong super earnings, some great news about EV area, or Biden come back talk about green energy of 1.92 trillion, how he exactly going to stack up on that plan. Those will be the good news for the economy. First quarter is almost reached the end. April should be a good month, and investor can profit from buying early at the dip. I know that in previous 2 weeks and last week, there's some investor buying into those low end of high tech, or even some small cap. So this week and in April, hopefully there will be some momentum pushing those stock up, and you can profit from that. As well as things should be still looking pretty good after first solid first quarter, and people look back and look at what else need to be repositioned in the portfolio. Obviously, with the $1,400, retail investor getting. I mean, if there's no place to do and they really don't need the money to pay grocery retail, which I hope they will go out to buy something to stimulate the economy, and go out to restaurant eat. I did see a lot more tables, dining during the weekend in Houston. So few restaurant that I went. So I think things will start picking up. So those are, and then stop. We'll look at the one catalyst again. Last week had a really bad initial jobless claim numbers and unemployment rise again. We'll see if this week gonna be have more companies start hiring. I think after first quarter, people still remain have some sort of budget. They look at the economy and vaccination increase, how step up the confidence. So you should be picking it up in that area. So this could be another stimulus, right? Unemployment rate dropping, of course, depending on who told you and how they interpreted it. I personally see it as a positive thing, but some people say that's actually hurt the stock market, right? So, but then I want to look at the last piece of this, which I showed in previous slide. S&P earnings growth. This is again the projection. What this story really telling you is that as we get closer to closer, the reality check, we do see S&P continue to grow a positive, which really kind of highlighted to the projection. Currently, people, well, if you look at last year of December, people projecting 7 to 12% growth of the S&P. So we can still get to the area in S&P is a really good mix of stocks, not just the high tech, but also some growth stock as well. So I'm excited to see this momentum. And again, like I said, April hopefully will be a good month to continue to move the market back up and really pick and choose a certain portfolio and the stock that are more solid and they really beat up really bad. As I told you, a stock could be 160 record high and drop it to $50 now. I mean, unless the stock going to go bankruptcy, it will most likely that people will see this is kind of discount at least 10% or 15%. They will jump back into the market and buy that and push it back to where the level is should be expected. Have a nice and wonderful week and hope everybody can make money this week. Thank you.